Hello students and welcome to this additional question. This question covers IFRS 9 as well as IAS 33. It's a very interesting question called peekaboo. So I want us to read together because it says that this entity requires your assistance and then they've made their financial information available and the year end is 31st December. It says that the profit before tax was given here in 2020, 2019, then the taxation, then the profit after tax, and then they've listed a list of items that were included in the profit before tax: depreciation, amortization, goodwill impairment, impairment loss reversal, fair value adjustment, income and expense, and loss on sale of vehicles. In the second table, they also show the ordinary share capital. There are 250,000 ordinary shares, and then 10% preference share capital, which was 6 million, but they had to then issue additional preference shares because you will see that it became 10 million. In the little footnote, it says additional preference shares were issued on the 1st of August 2020. Preference shares are issued at 80 Rand per preference share. Every preference share can be converted into 1/4 of an ordinary share. Moving to the second page, there are 3 additional notes. In the first note, it says that the entity has issued 3,005% debentures at 100 Rand per debenture. The debentures can be converted into ordinary shares at the option of the holder on the 31st of December 2024. The conversion rate is 1 ordinary share for every debenture, it should read. The related market rate of similar instruments is 3% per annum. The debentures were issued on 1 January 2020. The entity has also made share options available. These options allow for the holder to take up 100,000 ordinary shares in total at a cost of 12 Rand. The market value of the share is 20 Rand per share. The corporate tax rate is 28%. In the required part, it says A, calculate the diluted earnings per share for the year ended 31st December 2021. Ignore the comparatives. B says calculate the headline earnings per share for the year ended 2021. Comparatives are required. And then C asks to construct the general journal entry for the 5% debentures on the day of its issuance in terms of IFRS 9. In the last additional note, it says, please round all Rand figures to 2 decimal places, round all shares to the nearest whole share. Right, so let's see. The items that are, of course, potentially dilutive here would be the preference shares because it's not an ordinary share, but it has the potential to become one. So it's a dilutive instrument. There's also the debentures, which again is not an ordinary share, but has the potential to become one, which is again a dilutive item. And then also the share options. So again, it's a share option, but it can become an ordinary share when they opt to take up ordinary shares. So going to the memorandum. We're going to start with the required number A, which asks us to calculate the diluted earnings per share. In order to calculate diluted earnings per share, there are 2 steps to be followed. So the first thing to be done is that we need to go and rank the dilutive items. And thereafter, we need to go and test for the potential dilutiveness to see if it's dilutive or anti-dilutive. So let's start with step 1, which is the ranking. So the first item that I see there in this question, which is potentially dilutive, are the preference shares. And here we need to go and calculate what the preference share dividends were. Going back to the question, it seems like we have 80 Rand preference shares at a 10% return. So we will have to split our calculation because 6 million Rands worth of preference shares would have already been there at the beginning of the year. And then on the 1st of August, they would have issued an additional 4 million to get 4 million rands worth of preference shares to get to the 10 million. So let's do that calculation. So I'm just going to do it here on the right hand side so that the calculation is visible. I don't have to scroll up and down. So for the preference shares that already existed, right? So I'm going to say existing. They were already there on the 1st of January, and that was 6 million rand worth of preference shares. And we're going to times it by the 10%. I'm going to say this is calc for the pref dividend. Then we have the new issuance of preference shares, and the new issuance must have been worth 4 million to get to the 10 million at 10%. And then, of course, we need to go and count the months. The issuance of the preference shares were done in August, so it would be the 1st of August. So it's August, September, October, November, and December, which means that they existed for a total of 5 months. So in doing these calculations, we are able to get to the total preference dividend. You just count my zeros. There is a tendency of mine to not type enough zeros. All right, and then I'm just going to get to the total. For our preference dividend, and that was 7,666. I just want to see if we need to round to 2 decimal places here. So the increase in the earnings would be 766, then 666.67. Then increase in the ordinary shares. They say that for every preference share can be converted into 1/4 of an ordinary share. So for every 4 preference shares, you will then get 1 ordinary share. And here we will have to go and calculate, well, firstly, the number of preference shares. So the number of preference shares would to then be 10 million rand divided by 80 rand for a preference share, as per the question, and that is 125. So for every 4 preference shares, I would get 1 ordinary share. So it's 125,000 preference shares divided by 4 times by 1. And then, of course, I can go and calculate here, if I do the division, what the amount or the division amount is in order to rank it. Then the second type of dilutive item that I can observe there are the debentures. So again, the debentures require a bit of calculations because we need to go and type the information into our calculators, because debentures represent a yield to maturity mathematically. So we're going to start with the future value. We need to have a time, we need a rate, we need a payment, and we will also need to then calculate the present value. So if I look at the future value in terms of additional note number 1, there are 3,100 rand debentures. So in the future, we will have to repay them then 100 rand times 3,000 debentures. Then for the time, they say that the issuance is on 1st January 2020 and it will mature on 31st December 2024. So the first year would be end December 2020, then December 21, December 22, December 23, December 24. And that gives me a total of 5 years. The market-related rate was given as 3%. And then the payment will be calculated as a function of the future value at the rate that the entity offers. So that was then 100 Rand times 3,000 times the rate offered of 5%, which gives us 15,000. If I type that information into my calculator, 300,000 is the future value for 5 years at 3% at a payment of 15,000, and I calculate the present value, I get 327. I'm just going to type it in. 327,478,24. That is the present value that I am calculating as it relates to the debentures. Then I go and look at amort number 1. So amort 1 represents then 1 January 2020 to 31st December 2020 according to the dates listed in additional note number 1. So please remember that the debentures and the amort of the debentures will always run with the issue date of the debentures and not necessarily the year end of the company under review. So if I look at amort 1, it falls perfectly within our financial year, luckily, but if it didn't, we would have to adjust it by the number of months that did fall within our financial year. Since this falls within our financial year, we can simply take the amort 1 as is, and on my calculator, amort 1 is represented by 9824,35, rounded to 2 decimal places. Then we also need to go and take the tax into account because debentures are tax deductible, or the interest on the debentures are tax deductible in, I think it's section 11J. So if the tax rate is 28%, the remaining amount of the debentures would be 72%. So I'm simply going to take the interest times 72% to calculate the amount that would be obtained if the debentures were, or the interest on the debentures were calculated after tax. Then going back, the debenture amount to be listed under the earnings is then 7073.53, rounded to 2 decimal places. We have to go back and then look at the increase in ordinary shares. And the question reads that the conversion rate is 1 ordinary share for every debenture. So if there were 3,000 debentures, then there would also be 3,000 ordinary shares. And I'm again just doing the division of earnings by ordinary shares to get to a figure by which it could be ranked. Then the last item, which is potentially dilutive, will be the share options. And for the share options, the earnings will always be 0. And then for the calculation of the increase in ordinary shares, we need to go and calculate the bonus shares that were that can be obtained due to this share option. So if we look at the situation given in note number 3, I beg your pardon, note number 2, we have there a portion of the option that was paid for and a portion that was bonus that was not paid for. And the amount that was paid for was 12 Rand, and as a portion of the fair value, it's 12 Rand out of 20 Rand. And as a percentage, I get that 60% of the share options are paid for. So that means the bonus would be 100 minus 60%, which gives us the remaining 40%. And the share options allow us to take up 100,000 ordinary shares. So we're going to take the 100,000 ordinary shares that can be taken up, at 40%, which we are trying to calculate the bonus, which is the dilutive element, and that should then be 40,000 shares or 40,000 ordinary shares that we basically scored and that were not paid for due to the share options. So the 40,000 needs to be filled into our calculation. This, of course, will be nothing because 0 divided by 40,000 is nothing. If we now have to rank, we have to rank from the smallest number in terms of this column to the highest number. So the first rank would be the share option, the second rank would be the debentures, and the third rank would be the preference shares. And in calculating this, we can now move on to our next step, which is then the dilutive testing, so that we are able to get to the dilutive earnings per share. For the testing, we're going to start with basic earnings. So we have earnings and we have our weighted average number of shares or our ordinary shares. In this instance, there weren't any elements that affect the weighted average number of shares given in the additional information. And because there were no instruments that affect the VANOS, we didn't have to calculate it, and essentially the weighted average number of shares would just be the ordinary shares in issue. Right, so we're going to start with the testing, and here we start with the basic. And for the basic earnings, we calculate basic earnings by taking the profit after tax, and our calculations need only relate to 2020. And I only noticed now that there's an error in the required portion. It should say December 2020, December 2020. Right, going back, now we need to go and calculate the basic earnings. So the profit after tax was given for 2020, 1980,000. And we have to minus from that our preference dividend, and that was 766,666,67. Our weighted average number of shares would simply be our ordinary share capital or our ordinary shares in issue, and it's given as 250,000 shares. If we just go back to the question, there it is, 250,000 ordinary shares. And from this point forward, we now use our ranking. So the share options were ranked first. So that's the one that will go into testing first. 0 earnings and 40,000 shares. And then we need to get to a roll total, a rollover total, I'd say. And do our division. So it's going to be the earnings divided by the shares, 4,18. Then the next one is the preference, the debentures to be tested. So for the debentures, it's 7073,53. The number of ordinary shares would be 3,000. And again, I am just going to calculate a rollover total. And calculate the division, earnings divided by weighted number of shares. And this is then dilutive, because you can see it's going down, 4,18, now it's 4,16. Then we have the last one, which was the preference shares. I believe the preference dividend was 766,666.67. And then the number of shares that would result there was 31250, which I am literally just copying here from the top. And then I again need a rollover total. I'm just putting the totals or the subtotals in bold. Right, and just the totals again, earnings divided by the shares, and you can see it says 6.12. So between the debentures and the preference shares, there's an increase, so it's anti-dilutive. So what would then, for the year ended 2020, what would the dilutive earnings or diluted earnings per share be? Well, we have then the subtotal which was dilutive, or the last subtotal which was dilutive is this one. So we're going to list the diluted earnings as the total earnings in this rollover subtotal, and then the diluted number of shares were to be this total. So the diluted earnings per share is then this diluted earnings divided by this number of diluted shares, and that gives us the same total, of course, that we calculated above, 4.16, or 17 rounded to 2 decimal places. And that would have been our diluted earnings per share for the year ended 31st December 2020. Right, going back to the headline earnings, which is then required number B. So here we need to start with our profit, and they ask for comparatives. So we need to start with profit after tax. And that amount was given for 2020. It was 1,980,000. For 2019, it was 1,418,000. Then there are some items that have to be added back and some that do not have to be added back. So if I look at my added back items, the depreciation and amortization are not one of them that affect the headline earnings. The goodwill impairment will affect the headline earnings. The impairment loss reversal will affect it. The fair value adjustments would affect it, and also the loss on the sale of the vehicles should affect headline earnings per share. So going back to the memo then, we're going to start with the goodwill impairment. Right, so goodwill impairment would have previously been deducted from the profit because it's an expense, and the deduction was actually indicated in the question. So now we're going to have to add it back, and there's only a goodwill impairment for the 2020 year. So it's going to be positive 88,000 times 72%, as the tax rate is 28. There was no goodwill impairment done in 2019. Then we have the next one, which is the impairment loss reversal. I'm just going to call it impair loss reverse. And in the year 2020, there was nothing, but we need to do a calculation in 2019. So there we had a 25,500. That amount was a reversal. So it would have been added when they calculated the profit. So now we need to deduct it. We need to do the opposite. And that amount was 25,500 at 72%. The next item there is a fair value adjustment. And now it was either an income or an expense. If I look at 2020, there was a fair value expense given in the question. So if it were an expense, we are now going to do the opposite and add it back. It was 244,000 at 72%. In terms of 2019, there was a fair value adjustment income of 190,000. So for the reversal, I'm going to say 190,000 minus at 72%. Then we have loss on sale of vehicle. And in 2019, it was nothing. It was 27,000, an expense of 27,000. So it used to be expense, so now we're going to reverse it. So it's positive 27,000 at 72%. And now we are able to calculate our headline earnings. Right. We need to divide it by the weighted average number of shares, but there weren't any instruments that affected or items that affected the VANOS. So we can simply take the number of shares or number of ordinary shares. And in both years, the ordinary share capital, please note, was the same for both years. So nothing changed. It was 250,000 shares. And then we're going to calculate the headline earnings per share. Which is the headline earnings divided by the number of shares. And the same for 2019. And then both just need to be rounded to 2 decimal places. And there we go, our headline earnings per share calculated as per required B, and we have done comparatives. Then for the IFRS 9, which is C, the required C, they ask us to complete the journal entry. Just go back. To complete the journal entry on the day that the debentures are issued. So we've already done the calculation, right? So we're going to say with the issuance, which was 1 January 2020, we're going to have money in the bank account. So we're going to debit the bank account. And we will debit the bank account by the amount received, which is 3,000 debentures at 100 Rand. Then the financial liability will be represented by the present value. So, because remember, when debentures are issued, people give you money now, but you have to pay them interest and then repay their money later. So it's kind of like issuance of a type of loan to people who want to buy the instrument on an open market. So the present value should be listed here. And I believe that we did calculate the present value. There it was. 478 and 24 cents. As you can observe that there is the item here does not balance, so we need a balancing figure here on the debit side, and the difference will be taken to what we call the equity option reserve. The equity option reserve will then be debited or made smaller by the item, because we have a situation where this is a compound instrument. Why is it a compound instrument? Because these debentures can potentially be converted into ordinary shares. So that would have been the journal entry that was required on the day that we issued the debentures to the shareholders or the debenture holders. Right, I hope that you've enjoyed this question. I think this question is rather interesting, and it again addresses a lot of the calculations required to determine whether an instrument is dilutive. Headline earnings, very interesting, making sure we know what is included and excluded when headline earnings is calculated. And then for IFRS 9, compound instruments, ensuring that they balance off to an equity reserve because they have the potential to become ordinary shares. I will then see you in our next lecture.